Namaskar and good evening. Today we'll talk about a progressive company in the retail sector. The name of the company is Future Retail Limited. It is headed by a very illustrious entrepreneur by name Kishore Biyani. Over the last 4 years, Future Retail Limited has integrated its operations efficiently and built an unparalleled pan India network of 1,444 stores in 409 cities across India. So today it has 1,444 stores across 409 cities in India. Now let us see the details. Over 85% of the large format business is growing at over 10% same stores sales growth. SSSG means same stores sales growth. Over 80% of it is in large format and 15% is in small format. The large format is growing at over 10% SSSG means same stores sales growth over the last 15 consecutive quarters, which is a very good record. And the remaining 15%, mostly small format, is fast building a distinctive, very strong moat for itself. So large format also is growing well, small format also is growing well. Now, Future Retail has been the only retailer in India to have acquired five different businesses, retail businesses, and successfully integrated them and continues to create superior business post acquisition. So it's not an easy joke to acquire five independent businesses, integrate them and make them profitable within a short time. Let's see some examples. Hypercity is a large format stores. It has delivered 3.6% EBITDA in Q3 FY19 against minus 20% in Q4 FY18, which was the quarter of acquisition. So between the quarter of acquisition, that is Q4 FY18 and now Q3 FY19, the EBITDA has grown from minus 20% to plus 3.6%. So quite a good achievement. Likewise, in the small format, if you take, Hypercity was large format. Now let us take the small format Easy Day type of stores. Their EBITDA became, now it is profitable. But when it was acquired in FY16, it was at minus 6% EBITDA. Now EBITDA profitable. So large format, small format, both have turned profitable. Now, with the completion of the rapid inorganic growth phase, so hopefully now this inorganic growth stops somewhere now. The management, in fact, I was also a little worried why these people are going on acquiring so many stores from outside instead of growing organically. The management now believes that this is an opportune time to let Future Retail to chart its own growth independently with the deployment of data and technology. So same data and same technology, the latest, they want to employ for all the stores and grow them very well. Now the cash flows on the balance sheet of Future Retail are well positioned now because all the stores have come to EBITDA positivity. Now they are well positioned for sustained growth potential with improved margins. Now the return on capital employed is 19.4% and return on equity is 20.1% in September 18 compared to 13.4% ROCE and 9.1% ROE in March 16. Between March 16 and September 18, look at that. ROCE grew from 13.4% to 19.4%, 13.4 to 19.4. Return on equity, if you take 9.1% to 20.1%. So impressive growth. Now, promoters and management are highly motivated to contribute towards the integrated growth of Future Retail Limited. Now, this is the time for integrating all the operations and growing. Now, the management is thinking, they say they are committed. They are committing an equity infusion of 2000 crores at a price of 505 per share. You see, now they are committing 2005 crores at a price of 505 rupees per share. You know what is the price currently? It is hardly 427 in the market price, 427, but management is going to acquire at 505 rupees. That's probably because of the SEBI formula, but whatever it is, management has got so much confidence. Now, about the equity infusion coupled with the inflow of upside shares, these shall aid in reducing the lease rentals payable to FEL. Now, they are paying lease rentals to, I think FEL means Future Enterprises Limited. Probably Future Enterprises is taking the stores and leasing it to Future Retail. Future Retail is paying the lease rentals. Now, Future Retail wants to reduce that lease rentals and do away with the lease rentals completely within the next 18 months. So, to that extent, the profit will increase. Management firmly believes that these shall be hugely accretive to margins for the business and will give a strong fillip for growth. So, naturally, if lease rentals, which is a big amount, that is brought down to zero, the margins will go up and growth will also grow up like anything. So, and it will, Future Retail will maintain the strong trajectory of improved return on capital. Now, let us look at the big picture for Q3. Now, first, performance snapshot. The company delivered a year-on-year revenue growth of 13%. That is, we are talking about Q3 performance. Their revenue growth was 13% year-on-year. EBITDA increased by 30% year-on-year to reach 5.3%. So now EBITDA is a good 5.3% and it is bound to grow in the times to come. Profit after tax has increased by 10% year-on-year to reach 3.8%. You can say 3.8% is not a big deal, but it is increasing like anything. See, the period of acquisitions are over and now it is consolidation and growing. Now it is growing, PAT has grown by 10% year-on-year during this quarter. Now, over the last 15 consecutive quarters of almost double-digit SSG at Big Bazaar, same stores growth. Double-digit growth was there in the last 15 quarters at Big Bazaar, 10.1% in Q3 FY19, 5.9% over overall same stores growth in Q3. So, Big Bazaar alone is 10.1 and others overall if you take 5.9%, it is a strong base for Future Pay which they have introduced. More than 30% revenue contribution will come on a run rate basis. Future Pay is now attractively placed for management to reap sharp synergies across functions. Now, let us look at the network also, how the stores are growing. Network snapshot. Now, Future Retail is present in 409 cities with 1,444 stores. Now, in over 50 cities with more than 1 million population, there is a Big Bazaar store. The strategic focus in Tier 2 or Tier 3 towns also, there are 7 new large format stores. Fast increasing network of small format stores also, huge number of small format stores. consistent with technology and supply chain investments. So they are improving the technology so for faster transactions, even in small stores. Now, let us look at the business snapshot. Small stores delivered a growth of 29% business on a year-on-year basis. The scale continues to empower operating leverage. Customer conversions. Whoever comes should become a customer. That is customer conversion. That has resulted in a 7% improvement on a year-on-year basis. Now they are building technology and digital capabilities, which is a focus area for the management. And company is inching closer to a more robust 0-2-0 strategy. Technology and digital capabilities are being improved like anything in future retail. Now, the large format, if you look at that, Big Bazaar has got 286 stores in 144 cities with 12.1 million SFT. Big Bazaar has got 286 stores. Big Bazaar, all are big stores only. They are present in 144 cities with 12.5 million SFT. Now, 2 stores were opened in Q3 with 0.14 million SFT. Now, FBB stores. So, this is another brand which was acquired. So, FBB stores, 89 stores are there in 43 cities and 15 stores are opened in Q3. Food Hall, another large store. 11 stores are there in 5 towns with 0.1 million SFT. Now, so Big Bazaar, FBB stores and Food Hall, these are all large stores, large format stores. Now, small format stores, 3 brands are there, Easy Day, Fresh, WH Smith. Now, there are 1050 stores, small format, in 312 towns with 2.3 million SFT. Now, neither large format nor small format, others are there, E-Zone. They are 8 stores in 5 towns with 0.1 million SFT. So, cumulative, if you take, there are 1444 stores in 409 towns with 15.9 million SFT. Out of this, 108 stores were opened in Q3 itself. So, look at the pace of growth. In 1 quarter, 108 stores. You know, some of the other retailers have got totally 108, 120 stores. Now, these people are opening 108 stores in Q3 with 0.49 million SFT. The small format, as I said, includes 100 WH Smith stores having a total area of 0.06 million SFT. Now, this WH Smith is a 100% subsidiary of Future Retail. Therefore, results are on a standalone basis. Now, after December 17 up to December 18, that is, in 1 year, what is the growth? There was a growth of 489 stores. See, now we said in 1 quarter, some 100 and odd. In 1 year, the number of stores added are 489 stores. That is, the growth was 955 stores to 1444 stores. Overall jump is 489 stores. The area has grown from 13 million to 15.9 million SFT. Now, the challenge is integrating the technology and loyalty of the customers. They are giving an example, Easy Day, which is a small format one. Total members are 9,60,000. Average members per stores are 1,952 members are there per Easy Day, who are 1 year old at that store. Members visit minimum 3 times a month. Annual spend per member minimum 30,000. Members active some 818 stores. Now, Q3 FY19 performance summary. So, what was the financial performance in Q3? Income from operations in Q3 was 4,693 crores in Q3 compared to 5,301 crores in Q3 of FY19. Q3 of FY18, 4693. Q3 of FY19, 5301, 13% growth. EBITDA 4.6% to 5.3% it has grown from Q3 last year to Q3 current year. In rupees terms, 218 crores to 283 crores. So the growth is 30%. 30% growth from 4.6% to 5.3%, which is a 30% growth. Okay, so EBITDA growth 30% not bad at all, especially when you have to integrate so many disparate formats. Now, profit after tax in crores of rupees. Now, the growth is 3.9% and 3.9% in Q3 FY18 or 183 crores rupees to 3.8% in Q3 FY19, 201 crore rupees. So, from 183 crores to 201 crores, 183 to 201 crores, profit has grown 10% growth rate. Now, if you as we have said, net sales have grown to 5,301 crores from the previous quarter 4,929 crores, and previous year same quarter 4,693 crores. The year-on-year growth is 12.95% and quarter-on-quarter growth is 7.56%. See, remember, this growth has come over inorganic growth. That's important. Now, profit after tax 201 crores now compared to previous quarter 175 crores, compared to last year same quarter 183 crores. The growth rate is 9.99% year on year and 15% quarter on quarter. Now, equity capital as it is 100 crores, not very big, not very small. Okay, basic EPS is 4.01, growth rate is 9%. Market price is 427 now. Price earning is 26.6. Price earning 26.6 is not high for future retail. Many others are having around 50 also. Now, when it stabilizes, it could be around 50 or probably more also. It was more earlier. Now it is around 26.6. The volumes are quite good, so therefore there is no problem in buying and selling. 52-week low is 415, now 427, which means it is quite close to 52-week low. So we can buy, assuming that it will grow to 52-week high is 639. Face value is rupees 2. Last year growth, price growth was nothing. There was negative growth. That was because the whole scenario was correction mode. So, don't bother about that. Now, in the current year, there are so many positives for future retail. One is they are infusing 2,000 crores at 500 rupees. Second is, now they say inorganic growth is enough. And now we are going to integrate all these things with technology, etc., and loyalty, etc. So, as the EBITDA grows and as the profit after tax grows, it is going to be a big show. Therefore, future retail is one of the best retail companies to watch in the coming days. So, as I always, please listen 2 times or 3 times to my videos and then take your decision. Thank you for listening to me. I'll be back with you with another very good company. Thank you.